Welcome to Your 18 Now What? Thank you for joining me on this great Tuesday. I'm Dr. Catherine Gilstein, and I'm looking forward to empowering you with information about financial literacy. I will be posting new episodes every second and fourth Tuesday of the month. Before I get started, I wanted to make a shout out for a podcast that centers on rethinking mindfulness. Pay Attention provides people with an opportunity to look at what they can do each day to do a little better. So if you want to take some time for yourself to think and reflect, check out my friend and colleague, Dr. Stephen Stunder, and his podcast, Pay Attention. I received a lot of positive feedback on my last podcast about credit and being able to clarify a few things for you. I appreciate the feedback, so keep sending emails and visit my website, your18nowwhat.com, where you can always find the latest podcast. Let's get into today's topic. Not super long, but definitely important. We're going to be talking about taxes. Yes, it's that time of year again. Please note that the information that I am providing is not tax, legal, or accounting advice, and that the material has been prepared for informational purposes for you. First, I want to share a couple of fun facts that I found out about taxes while researching this for you. The tax code is over 74,000 pages long. That's a lot of pages, and no wonder why we can't keep on track of all the different tax codes. Since 2001, there have been more than 4,500 changes to the tax code. Sometimes these changes benefit us taxpayers, and that's a good thing. But sometimes they're just too complicated to understand. Taxpayers lose out on millions of dollars by not filing returns. So, for those of you that don't owe any taxes and you neglect to file a return because of that, there might be a tax credit that offers a refund. So, even if you don't owe money or you're not expecting money, you should definitely file. Another interesting thing, an estimated 44% of Americans pay no federal income tax. And it's not because they're cheating on their taxes. It's more that the IRS offers tax breaks for lower income earners, and they might be able to wipe out their tax liability altogether. Unfortunately, not the case for me, but that's okay. More than 1/5 of paper tax returns have errors, and the IRS reports that the error rate for electronically filing is at less than 1%. So that's pretty impressive. Also, less than 1% of tax returns get audited. So if you're worried about that, really no need. Of those that are audited, most are done via email. High earners are more likely to get audited than middle income tax filers, and those who report no income have an increased risk of an audit. Most households take the standard deduction instead of itemizing, so far less complicated and definitely far less time consuming for you. IRS employees also break the law. There was a report from 2015 that found that close to 1,600 IRS workers willfully evaded taxes over the course of 10 years. I think that's crazy. Anyway, there are a lot of different taxes, and understanding what they are and why they are taken out of your paycheck can be important. Some people want to know exactly what they mean, and others just want to know how much money they're taking home each paycheck. There's federal tax withheld and is determined by your income level and the deductions you declared on your W-4 form that you filled out when you were hired way back when. State income tax is collected in most states and usually covers costs involving education funding, bridges, tunnels. Local income tax is collected for the funding of police and fire services, maybe libraries, or any other programs and projects that can benefit the local community. Social Security tax and Medicare tax are mandatory for everyone to pay. They are typically a fixed percentage of your gross earnings, and they fund the Social Security and Medicare programs. Pre-tax deductions are taken out of your paycheck before taxes, and these can reduce your tax liability for when you file your taxes at the end of the year. These deductions can be for retirement contributions that you make at the end of the year. Post-tax deductions, on the other hand, are taken out of your paycheck after taxes and can be for disability insurance or any Roth IRA contributions that you have coming out. The bottom line is that taxes provide revenue for federal, state, and local governments, and that this revenue benefits all citizens. What about filing taxes? Let me start by saying everyone should file taxes. Even if you don't owe any money to the government and the government doesn't owe you any money, filing taxes is a really good way to protect your identity. It's a way to reduce fraud risk for yourself. Filing taxes is important because it is where you are reporting your income and expenses and determining if you have paid enough taxes throughout the year. If you have overpaid and you have a lot of deductions, write-offs, then you'll receive a refund. If you have underpaid, then you will owe the government money for taxes. Either way, it's a good idea to file. If you are early in your career, you could typically file a 1040 form, and it's a pretty seamless process. You could probably do it on your own. You can use TurboTax or H&R Block and complete the tax return online. If by chance you do get stuck, there is a helpline for you with those services that you use. If you're further into your career, if you have a family or dependents, maybe you have some rental income, interest or dividend income, then it's definitely a more complex process, and you'll probably need to secure a professional. There are tax preparers, tax specialists, and tax associates, which, by the way, are all interchangeable titles for people that can prepare taxes. You can also seek out an accountant or a CPA, and they can specialize in whatever area you need, whether it's personal or business. Whatever route you decide, pay close attention to what you are filing. If you secure a professional to do your taxes for you, don't just drop off your paperwork. Ask questions. What if you want to start a business this upcoming year? If so, ask questions about how that will affect your tax filing status for next year. If there is something you could be doing now to reduce your tax liability for the next year, ask questions, especially if you found out that you have to pay taxes this year. If you owe money on taxes, it's a good idea to ask your accountant, CPA, tax preparer, whoever you go to ask, why do I owe this much this year? How can I reduce my tax liability for next year? Maybe you want to pay quarterly taxes each quarter leading up to the next tax filing season. That can help burden that big bill of a tax at the end. Whatever your circumstance, you definitely want to make sure you file your return on time. Tax day is April 15th, or file an extension. The only thing to note is that filing an extension is not an extension to pay if you owe money. There can be late fees, interest, penalty payments that can accrue if you don't file on time. There is a failure to file penalty that could be imposed if you do not file at all. Any payments that are not made could be garnished from your wages. They could place a lien on your property or revoke your passport, so you won't be able to travel anywhere. Filing taxes early can be a benefit. Typically, filing taxes early could mean a faster return and a faster refund if you're getting money back. Typically, the IRS is less busy early in the tax season than they are in April. For people that have interest income, or dividend income, they usually don't get those statements until the end of February, so they typically wait a while to file longer. But the earlier in the tax season that you file, the faster the return for you. There is IRS Free File, which allows qualified taxpayers to prepare and file federal income tax returns online using guided tax preparation software. It is free. You can visit irs.gov website for details and to answer any questions you may have about filing and any fees imposed. If you have an easy return to file, you might want to check out AARP TaxAid. They offer free filing for people that have simplified returns. So if you have your basic W-2 wages, a few interest income statements, They can do your taxes for free. And you don't have to be a member of AARP or over the age of 50. So you can check them out online, see where they have a location near you, set up an appointment, and have your taxes done for free. The people that volunteer for AARP tax aid, they're people that are retired accountants, retired CPAs, retired employees of the IRS. So they're definitely qualified to help you. Be open to learning, be open to listening. Ask questions. What more do you want to know? Visit my website at your18nowwhat.com. Drop me a line. Send a question or a comment. Any questions received will be responded to by either email or addressed on the next podcast. Remember, be invaluable for what you share, not what you know. See you next time on Your 18 Now What. Thanks for joining me.